CFC Seymour joining us from Hong Kong. The dollar clearly trying to climb back a little bit of the ground that it's been losing of late. Nonetheless, going to the Fed meeting with a Fed cut expected. Stephen, what's the dollar going to look like?
Well, I think what we might see is, well, the whole question is it going to be 25 basis points or 50 basis point cut? And we think there's going to be a 25-point cut. And with that, we could see a bit of a rebound in the dollar because of the cards on the table that are saying that it's going to be 50. So when there's a 25 cut, we should see a bit of a bounce back in the dollar. And as well, more importantly, we get GDP data out tomorrow as well, and we expect that to be above consensus. So overall, we are a little bit bullish on the dollar this week.
And the thing is that it seems that even if we do get the 25 basis point cut, which as you're saying is fully priced in, it may not be the last. So if indeed they give some commentary suggesting that there's still a little bit more to go in terms of cutting interest rates, could that be something that undermines the dollar?
That is something for sure, and we do look for that. But at the same time, there are inflationary pressures coming back into the market here, just with food prices and oil prices, and it has been taken off the table a little bit, but we could see that come back on. And as well, this week with job numbers, we expect to be a little bit stronger than consensus as well. So overall for the week, we do think that the dollar will come back a little bit. We think that it has been a little bit oversold right now. Interest rate differentials are at play, but overall we think that the dollar will come back a little bit here.
Stephen, is the Fed going to be the main attraction for currency markets this week, or are they going to be paying some attention to the economic data that's coming out stateside as well?
I think it's going to be more on the economic data because everybody's so focused on the Fed cuts, and they've already been priced into the market already. Even if it's 50, it's a little bit has that been priced into the market. So I think that if we get positive GDP and we get strong growth numbers on the job fronts, that should be the more focus for the week here.
Where do you think we're going in terms of the high-yielding currencies? Risk appetite seems to be fairly strong at the moment. Is there anything that you see on the horizon that could change that and therefore change the landscape for the high-yielding currencies?
Well, I think as long as we're talking about the Fed cutting rates, and we do expect that to be the trend here, that we do expect equities across the globe to remain quite bullish. So risk appetite we think will continue here, that the credit crunch seems to be not as bad as we thought it was going to be 60 days ago. So as more and more positive news comes in, that risk appetite picks up, and we're seeing that in the yen right now. So what we do expect the carry trade to continue, and currencies like the Aussie will continue to appreciate here.
What's the story for the yen? You know, it's really interesting the bearish factors for the yen sort of being pitted against the bearish factors for the US dollar. And even though the dollar dropped against the euro, for example, overnight, it actually gained against the Japanese yen. Is the yen story still very weak, especially as the BOJ doesn't look as if it's going to be able to hike rates anytime soon?
Yeah, and I think we're seeing that earlier today when we saw the job numbers a little bit disappointing there. So the whole consumer recovery is continuing to be delayed here. So I think the yen story will continue to be the carry trade story for 2008 here. So with rate hikes continuing to be delayed, weakness will continue, and we're seeing that more and more against the European currencies. So look for that to continue here.
Okay, Steve, thanks so much for joining us as always. Stephen
Great,
Rowles,
thank you.
Analyst at CFC Seymour, joining us live from Hong Kong. Well, after this, we're back with final thoughts.